Welcome to the Smarter Trading Podcast. If you want to sharpen your trading skills or become a more savvy investor, then you're in the right place. Every week, we sit down with professional traders who are ready to share practical insights on what it takes to succeed in modern-day markets. Smarter Trading, the show to watch to trade smarter.
Evan Medeiros is the founder and CEO of The Trade Risk. All opinions expressed by guests are solely their own opinions and do not reflect the opinion of Evan or The Trade Risk. This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Evan and guests may maintain positions in securities discussed in this podcast.
Hello, everybody. Our guest today is Gregory Krupinski. Greg has been trading markets for about 20 years, all while working a full-time job, raising kids, and continuing to find time to learn and improve his process. In this episode, we talk about having balance, juggling real-life responsibilities with actively trading markets, and how Greg makes it happen. He stresses the importance of keeping things simple, using daily and weekly charts, and how fewer but slightly bigger position sizes help him focus and really pay attention to what he owns. Please enjoy this conversation with swing trader Gregory Krupinski. You've been trading for over 20 years, which means you've probably get started at a fairly young age. So tell me a little bit about your background and sort of how you get started.
My start in the markets, my interest came, I was probably really little, probably 8 to 10 years old. And I used to like the Boston Celtics. And at the time, they were a publicly traded company. So my dad bought me one share of the Boston Celtics, and they actually sent the physical stock certificate. So I had that hung up in my room, and then I could have my buddies over and say, hey, I actually own, I not only like the Boston Celtics, I own them. There's a certificate to prove it. So I think that kind of got me interested. And then in high school, I started to become more and more interested because like a lot of people, I thought, well, hey, this is going to be easy. I just need to get a job, save some money, invest in some stocks, and then make a ton of money and be set. So 20 years later, I'm still trying to figure that one out, but it's a process.
Still on that path.
Yeah. But yeah, I was in like the late 90s, the tech boom. I was trading then in an account. I was, high school age and no clue what I'm doing. I probably could have just thrown a dart at some tech stock and made some money, but I'm looking for like stocks with the lowest PE ratio and thinking I found the secret, just buy undervalued companies. And then, you're paying $15 commission each way. We're so lucky now not to have commissions. It's you can trade a whole different way. But I'm buying really small dollars and paying all the commission. So long story short, it's just a slow drip on the money as you look for new opportunities and spend those commissions. So not a very good start. And then probably about 10 or 15 years ago, I started getting more into, because I'm a CPA, I'm an accountant. So I was kind of had the financial background. So I was into looking at companies' financial statements and trying to uncover opportunities, which is all well and good. But there's something missing, I think, especially from a risk management perspective. And, 10 or 15 years ago, I started getting into charts and I'm like, I love this. It's all these millions of people all over the world buying and selling shares of stock, and it all shows up on this chart and you can see it. It's just like the neatest thing to me. So ever since then, I've just been kind of hooked on looking at charts and, different ways of, different time frames. I've, like a lot of people, I've gone through using tons of different indicators, and you always think you find the holy grail, like, oh, if I use this moving average and this 10-period RSI instead of 14, I'm all set. But as you know, there is no secret out there.
Right. Yeah, no, totally not. But we often have to learn it the hard way, right? We all have to experiment and test. So you were trading during the craze of the tech 90s, but it sounds like you didn't get wrapped too much into the euphoria and then the subsequent sort of crash, because you were kind of going at your own pace.
It was just a small account, and I wasn't looking at those tech companies. So that was really before I got, more into it.
Gotcha. So it didn't discourage you at all, or you didn't have any bad experience leaving that kind of boom and bust cycle. You were just kind of continuing to learn pretty much through it.
Exactly. Now during the housing crash, in that period, I was a little more into it, and I was trading, retirement accounts and things like that. So that one left more of a mark. I think at that point I avoided a lot of the downside, but then, and to this day, I still kind of struggle like with the COVID. When things go down, I'm really hesitant to trust it again. So I think that one kind of left a mark, I think. And then every time, like a lot of people do, every time we'd start going higher, for every top in the market, I probably thought there was going to be 50. I just, it was just a poor mindset rather than focusing on what's actually happening in the process. But that was kind of hard to shake.
Being a new trader, getting started, your eyes are so big, wide open, and you got all these grand visions of making all this money. But the truth is, I mean, it's such a good blessing that if you're starting young as a trader, you don't have much money, because those beginning years just statistically are probably not going to go so well. So it's like such a good thing that you can kind of, again, have a smaller account during this crazy cycle, and then helps you see the power of markets, and then it helps you sort of grow and stick with the market, grow your account. So it sounds like you had a good you had a good sort of entry, timing wise, kind of into everything. So bringing you up to sort of current day, how would you describe your approach now? What is your framework present day for sort of tackling markets?
I try to keep things as simple as possible. I try to look at, different time frames. I'll look at, longer term time frames. I get a lot of ideas from there, but then I'm going to enter on a shorter term time frame daily. And then sometimes if I really like an idea, especially if it's a little stretched on the weekly or daily, I'll get in, to the intraday 30-minute time frame. Because what I want to see is, I'm not going to enter anything that's not coming out of some kind of consolidation. I'm not, and there's nothing wrong with this. A lot of people do it and do it successfully. But if we're looking at a weekly chart and something's, breaking, it's a breakout. I play a lot of breakouts. If it's breaking out, to a new high, but it's already ran up, 15, 20% in the last couple of weeks, that's not going to interest me, because what I want to see in a chart is the first thing I look at is, where's my stop going to be? Where am I wrong? And if it's just going straight up, then it's really hard to find that. And I've found usually if it's not obvious after looking at it for, 20 seconds, then it's probably time to pass and move on to the next one. I trade two accounts. So one account I kind of use relative strength a lot. Over the last 6 to 9 months, I'll look at that, and then I trade mostly ETFs in that account. So I look for strong sectors or industries. Not surprisingly, this year that account has done a lot better. I don't trade that one as frequently, but that account's done a lot better than the account that I, more kind of swing trade out of. Like a lot of people lately, I kind of got chopped up quite a bit. A lot of good entries just, didn't didn't really follow through. And my risk is always pretty small. I never risk more than a 0.5% of my account balance on a trade, which if you have a fairly tight stop, you can still get a pretty big position size. So usually I'm not even coming close to that. It's kind of just like treading water. You have a good week and then a bad week. So it's kind of been flat, but the slower money account has been better this year.
How are you finding these stocks? What's the starting process of what gets you to even look at anything in general? Are you scanning or screening for stocks?
Yeah, I do. I think most of them I find just by eyeballing them, but I do have some scans that if I'm, the market's, it's been a little choppy lately, but it's still obviously in a clear uptrend longer term. So I'm looking for stocks that are in uptrend. So I'll just do scans for, stocks that aren't oversold, that are above their, 50, 20, 200-day moving averages, which if you do that now, you're going to get a huge list. I kind of try to refine some scans from time to time, but most of the ideas that I find are, if something catches my eye, but maybe it's a little bit extended, I'll just save it on a watch list. And then I'll check that watch list, daily or during the weekend, and then add and delete things as they come to my attention. And, Twitter and stock twits could be good resources too. If somebody posts a chart, you're like, hey, I kind of like that. You don't want to just blindly go out and buy it, but maybe, I'll keep my eye on that one.
Are you including any, so are you still leveraging any of the, how you came up and then I guess your background, like, are you doing any fundamental sort of criteria or qualifications on anything, or is it just 100% technical now?
I do from time to time. Like I'll run some screens on FinViz to look at, um, sometimes like earnings growth or just, like value stocks have been making a nice run lately. So just to kind of generate ideas, but none of that is actionable unless the chart's setting up. But I do
Sure.
run them just out of interest and maybe to get some good ideas. But yeah, to me it means nothing unless the chart setup's there.
Gotcha. And then, I mean, so yes, we're recording this in May of 2021, and it's been a tough past few weeks for momentum growth, sort of high beta stocks. They've sort of been pulling back for the past month or two, or if not pulling back, certainly chopping around and doing a whole lot of nothing. So lots of false breakouts. I'd imagine, there's lots of candidates right now, or there's lots of potential setups for you. I mean, how many positions would you fit into a portfolio? What's 100%? If you're 100% long, full go the market, is that 10 positions? Is it 20? Is it
Yeah,
5?
I'm glad you asked that because that's something that I really switched up from the past. So probably about 10 to 20 would be where I'd want to be. But what I've done in the past that I found is doesn't help me at all, and I'm guilty of this last year too. It's one of those things like in trading, you shouldn't do something, but sometimes you just find yourself doing it. I mean,
Oh
discipline's so
yeah.
important. You just got to make sure you don't get hurt too bad if you're doing that. But I, like last year when there's so many things moving, it's like you're in something that's working and be like, well, I like this better, so I'm just going to sell part of that, use the funds to do that, and then before I know it, I have 30 positions that it just doesn't work for me.
Hmm.
And more often than not, the things that I sell will I in one of the charts that we could go over later is sometimes I'll sell because something else might look attractive, and there's really no good reason to sell. It's still making higher highs and higher lows. So it's like if it's not broke, don't fix it. Um,
Hmm.
so I was spread way too thin, I think, in the past. But ideally, I think about 10 to 15 positions.
That's a nice solid number, and especially, yeah, to do it purely manual for the most part, that's like a healthy number. And I think it's almost back to what you said earlier of less is more, right? Trying to keep things as simple as possible. Sometimes I get these ideas too where it's like, yeah, I could sell like 1/5 of all these stocks and then inch into something else. It'll diversify me more. But then it's like, it's so complicated, and then I have to think about it. Like, it's so yeah, I 100% agree. Kind of the 10 to 15 spot is really a sweet spot because you can have a good size in those
Yep.
stocks, and each position does make sort of a meaningful, appreciation to the account when things go in the right direction. So I think that is, a really solid number for a lot of swing traders in this sort of time frame. And so, speaking of time frame, though, what would you estimate your average sort of hold time is in some of these
It
stocks?
varies. Ideally, if it's working, as long as it's still working. um, but usually, what I like to do if I go into a position with a full size position, if it goes up, I mean, I hate to put percentage terms on it because it depends on the setup. But say it goes up, 5 to 10%, I will sell a part of it. Now, what I used to do is always sell half of the position. And I found out that kind of led to my problem of getting spread too thinly because I have all these half positions and quarter positions that were trending, and then I just have way too much.
Yeah.
So I'll sell a little bit just to kind of make sure that I end up profitable in the trade. If you sell a little bit at a 5% gain, maybe bump your initial stop up a little bit, just to make sure that doesn't go into the red. And again, like I talked about, without having commissions, this is so nice because you can sell 2 shares if you want. It doesn't matter, but I'll sell maybe no more than a third, and then just kind of let it work.
Right. So it sounds like the remaining position, you sort of turn into a bit of a trend follower on that. Like, you just want to see that sucker go and hopefully never have to sell it.
Exactly. Yep. That's the idea.
Yeah, I mean, I found in my sort of research, going through lots of different back tests. I'm sort of playing in a similar kind of time frame on one of my trading systems, and objectively, to maximize profit, it's trying to get that position to just totally run. But if you don't scale anything, based on some of the things that I've seen, if you don't scale anything, it's all the psychological side. You're going to give back a lot at times. You're going to erase profits, and you are going to just have to endure an emotionally more difficult sort of roller coaster versus trying to scale a little bit. And then, like you say, it's that hybrid approach of sort of letting the rest run. I think that's super smart and just makes it sustainable. Otherwise, it's just so difficult.
Exactly. Yeah. If you have a full size on, even if it's looking good, if you have to deal with 3 or 4 weeks where it pulls back 15, 20% and it's, 10, 15% of your account, it's like, I don't like the way that looks.
Totally.
But so if you scale out and book in some profits, that kind of helps. It helps you be more patient too, because
yes,
I think that's one of the biggest benefits.
So are you looking at sort of broad markets first, making sure everything's sort of in check, or are you starting from the bottom and saying, hey, this stock looks great, I'm going to take it, don't care about what the NASDAQ or the S&P is doing?
Yep. More of the second. I kind of trade them all on their own merit. Like I said, I do look at relative strength a lot. And I do consider just in general how the market is doing. If even if a stock looks great, if the market or its sector isn't doing good, if the stock still looks great, don't get me wrong, I'm still going to take it if the setup's there. But maybe I'll just take it a little slower. Maybe not go full size. Maybe start smaller, and if it continues to work, increase size a little bit. But I look at relative charts and relative strength and things like that. But in terms of actually trading, I'm just going to trade what's on the screen, what's on the chart, and not worry too much about everything else. Because I find that if you do that too much, at least me personally, you can talk yourself out of a lot of good opportunities. You can kind of get a little gun shy. Like if I'm liking, gold, gold is, inversely correlated to the dollar usually. Not always. Those correlations can change. So you don't want to pass on a good trade opportunity just because something else that may or may not impact it is going the other way. I mean, that's just an example there. So I stick to the chart in front of me for the most part.
Yeah, that makes sense. And in terms of your entries, it's almost all breakouts. Are you doing any sort of, pullbacks, knife catching, reversals, anything like that?
I try to avoid the knife catching. But I will say, I do work full time, and fortunately, I contribute to a retirement account, the same amount every month. If you do work full time, it's hard to beat that. If you have a set account that you're trading, gosh, if things are going down, you just want to get out of the way and let it settle. But if you have that constant flow of money in, that's a really nice advantage. And over the long run, that's tough to beat. But in terms of my trading account, no, I try to stay away from that. I do buy pullbacks within uptrends. Like I said, I try to, if you've seen my charts that I post on Twitter, Stock Twits, it's usually around a horizontal level is where I like to trade. But when I do buy pullbacks to former breakout areas, I don't just want to buy it because it's hitting that level. I'm going to make sure that it's starting to show some strength. So I'm trying to be, and I have been a little bit more patient. I'm not just going to buy it when it starts moving back to that area that I think should, hold. I want to see it kind of stabilize there. And then that's where I might go into a shorter term, maybe a 30-minute chart or something, look at that area and, kind of just watch price closely. Now I can't do it all day long, but, if I can check it in the morning, check it at lunch, that's usually good enough. Maybe a couple times throughout the day, just to kind of keep set alerts and things like that. You don't need to be watching it all the time.
Sure.
Which is, I think, it can be an advantage sometimes too, because I know for myself personally, if I do watch it all the time, that's, you're more likely to make those kind of impulse trades. They feel great when they work out, but that's not a long-term sustainable strategy.
Yeah. The market is just, it's just trying to lure you in at all times, right? As long if you stare at it, you're going to see a trade eventually. It doesn't take too hard, it doesn't take too much convincing for us.
I have a thought on that too. Just made me think of something. But so when it's when we get that pullback in there, I'll look at the shorter time frames, and I'm still almost looking to buy a breakout, but almost on the shorter time frames. So I'll either do that, just make sure it's kind of putting in a higher low on that shorter time frame, or I, I sometimes use moving averages on like hourly chart or half hour, and just to make myself be a little bit more patient, just kind of wait till those start crossing back up, just to kind of confirm that yes, price is respecting that former breakout area and price is starting to move up. And then the nice thing about buying those pullbacks is for me it's easy to see exactly where the stop is. It's usually at a very obvious place, just below the swing low, the low of that candle, which might be a very tight stop. So you always run the risk of getting stopped out pretty quick with those versus kind of scaling more into a trending trade. But it's those small losses aren't going to kill you.
Yeah, I mean, drilling down into like the smaller time frames and paying attention when it gets back into your areas of interest, so to speak, all while having a full-time job. I mean, what are the techniques, or how are you sort of juggling, you're in a meeting, or you have to, kids need to be picked up, or something needs to happen, yet you have a trade that needs to happen? Or what are some of the ways you're sort of making it work?
One way I make it work is I know I'm going to miss a lot of trades. I use alerts. I'll have one thing I've done to help myself is instead of having I'll have say 50 stocks on my watch list, then I'll have like a kind of a focus list for the week where I maybe have 5 to 10 stocks that I might really buy these this week. And I'll set alerts at the areas. But yeah, there's been times an alert will go off like, hey, XYZ stock broke above this area. And I just won't be able to get to it. And then maybe I'll go to it later in the day. I like to do most of the trades that I plan out. I like to do them mostly towards the close anyway. But yeah, I could have a meeting then too, and I miss it. And sometimes it's for the better, and sometimes not. So I think it's just you just kind of have to get used to. You're not going to catch them all, and you don't have to catch them all. There's always opportunities out there, and the ones that you don't catch, maybe they'll come back to that spot you were watching anyway, and you'll get it. So I think you just need to let it go. There's tons of trades out there. I don't need to be watching 1,000 stocks. I could pick ones I like and kind of go from there. I did have because you did mention we were talking about watching things constantly, and this is something that that I would do if I used to have days off, is you'd almost go into the market just looking for a trade. And I would do this with options too. Like, okay, I want to trade options in SPY today. Let me find something to trade. And you're just watching it, looking for a trade. That's not how you're supposed to do it. It's supposed to come to you. Sometimes it takes me a long time to learn lessons, but I've learned that one. But before you enter it, any trade, and I'm speaking to to myself here, this darn well, but just take a little pause. Just say, okay, is this really something I want to be entering? What's my risk if this goes wrong? Am I really going to sell when I'm saying I'm going to sell? And just kind of give that mental check. And I think the longer you do it and the more you do it, kind of the easier that is, and you kind of know what your weaknesses are, and you can stop them ahead of time.
Yeah, that's great advice. And I love I want to circle back because the way you so quickly and convincingly sort of said that you're going to miss a lot of trades. That mindset right there, though, I mean, it sounds so subtle, and a lot of people probably, gloss right over that. But that quick sort of convincing mind check switch that you've made, that you're going to miss some, prevents you from the anxiety, the freaking out, or doing other things. I mean, we're all human. Everyone's going to make mistakes and feel the FOMO or whatever else at times, but that is, you've clearly come to that sort of conclusion or adjustment. So good on you for that. And price alerts, so you mentioned you use those. I mean, I remember having my mind blown. This was like 10 years ago or something, the first time I sort of discovered price alerts on a charting platform. And I realized, like, oh my God, I don't have to actually like stare at my Apple entry. Like, I can actually leave and get a text message and email. Like, that to me was so game changing to sort of, and that's when I was doing things part-time as well. I had a full-time job. And I just remember being like, oh my God, like this is This is so much better.
It's nice. Yeah, you keep you out of trouble too.
Yeah.
It won't, you won't feel like you need to get in the trade. You can kind of just wait for it to come to you.
Any other techniques that you use, or any other, order types or anything else to sort of help you kind of automate or maximize some of your busyness?
From time to time, and I don't want to keep this open more than a day, but if I'm looking at something that I really like and it just needs to say it needs to move up like another 10 cents or 25 cents, it's really close to my buy area, but I just want to see it bump up a little bit. Like I don't do it often, but maybe a buy stop. Um, and that's if I know if I have meetings all day or, some activities going on. And I know that I really, really want to own this. I've done my homework. I know where my stop's going to be, et cetera, et cetera. I'll use buy stops, and I do use hard sell stops, which can be bad. I'll try if I'm looking at something pre-market and say some announcement came out and I can I'm not always going to catch this either because maybe I won't be able to check pre-market or things like that. But if I do notice that, I'll take that off, first thing in the morning, and then just try to monitor it as much as I can, maybe the first 5 or 10 minutes, and then re-put my stop under that low. But that's another thing too. If you use stops, especially hard stops, you're gonna get stopped out of trades, and they're gonna run without you. That happens. I mean, I think if you want to not get, preserve your mental capital, you just have to just get over it. It's gonna happen. And that gets easier with time too, because trust me, that's happened so many times. It's not a big deal. I'm like, okay, great. Now I have some funds freed up to look for the next opportunity.
Will you actually immediately re-enter if something, if you just sort of get wicked down, it hits your stop loss, but then it puts in this, I don't know, beautiful high volume hammer? Like, are you willing to go right back into it? Or, I mean, I guess technically that probably means it's pulled back enough, so you might be waiting for it to settle, but have you ever done anything like that, or would you consider
Absolutely.
getting
Yeah.
back in?
And sometimes if I do get stopped out on something, I'll just set that alert on it right away, to alert. And will I always take it? No, but I have. It's good. It's good to do that. Maybe maybe you have to pay a little bit more than you did, but I think
Sure.
you just need to approach it as a brand new trade. It's kind of the last one's kind of a sunk cost, so it's okay. Here's a new trade to set up. Let's go.
Yeah, stops are interesting, and I've gone back and forth, and I've done a lot of testing. I used to do, the stock has to close below a certain level, right? So it can't just be an intraday hard stop. It has to actually close the day below it, and that removes noise, and it can help, but obviously it can lead to some disastrous, sort of situations where stock is plummeting, and then you're just sitting there saying, "Nope, I'm going to wait for the close," and it's 10% later, and you're like, "Wow, that was big." So, like you said, you kind of have to usually simple and the more straightforward is better, and you have to sort of settle on it and just understand that this is markets, right? Like we have to sort of make do with what they give us, the good and the bad, and it's kind of the cost of doing business. You get stopped out sometimes.
That's the truth. I always think selling's harder than buying, at least for me. When I go to buy something, I know I'm confident in my buy. I know exactly what I'm looking for. I know exactly where I don't want it anymore. But selling, there's not a perfect way to do it. You don't have the future information, so it could keep running without you. It could be a great sell. You just never know. So I feel like that's probably one of the hardest things.
Yeah, I 100% agree. So you have a quote on your, I think it was on your website or something I've heard you say before, is that when you're putting on a trade, you're only entering into trades where you believe there's a sort of a favorable reward to risk ratio. How are you sort of quantifying the reward? How are you sort of thinking about where you might be selling on the way up and where that stop's going to be in relation to
Yeah,
it?
that's a really good question. That's almost easier on, when you're not at all time highs and it's kind of like a swing trade. Maybe it gets back to creeps around that previous high from a few weeks ago. Like, okay, that's a spot where I'll probably lighten up. So that's a little easier to qualify or quantify. I'm sorry. But a lot of the trades that I make, I don't like looking at a chart and seeing any price action above it and to the left. So that is a little harder to quantify. So I think in those situations that I think I'm more focused on the risk, but knowing that it's in a strong uptrend and it needs to be breaking out of that consolidation. So if it's reasonable, if my stop's only 2-3% below my entry price and it's in a strong uptrend, that's got to be a nice risk reward ratio. If not, I'll find out really quick and I'll be stopped out. But that is harder to quantify for me because I'll look at patterns and things like that, but I don't do, price targets based off patterns. I might look at that, to take profit. But I use kind of just like we talked about earlier. If it's trending, I'll I'll try to keep riding with that trend. Although sometimes you'll get a little impatient and do that early sell. But if it's for a gain, I mean, it's still a win, but you got to maximize those wins because you don't, I know I stop out of more trades than I win, but you got to keep the wins bigger than the losses.
Yeah, it's the constant sort of tug of war. You gotta put food on the table. You gotta take profit sometime, right? You gotta totally sell, but like you said, you're aware that you need to hang on to those winners for dear life. So yeah, selling is tricky. It's a lifelong sort of pursuit on and there's no perfection. That's the thing we all need to really quickly realize. It's like there's no perfect selling method that's going to get you out. You're always going to leave some on the table, or you're going to overstay your welcome.
Sure. Yeah, it's important not to beat up on yourself too when you sell too early, because it's like, well, you had your reasons. It was a good trade. If you made money on it, like you don't want to dwell on what could have been, because that doesn't do you any good right now.
I mean, along those same lines, so we are recording this May 2021, and it has been choppy out there. It has been pretty tough for breakouts unless you're really kind of narrowed in on, maybe energy and utilities and some other things that are working recently. How do you preserve sort of confidence during this time? If you're getting stopped out, are you someone that likes to sort of then reduce position size? Or are you just getting right back up to bat and saying, got to keep swinging because I know the good times are coming? Any tips on sort of getting through those tough times?
Yeah, I think I'm more of a keep swinging. But I think you can do it two ways. I think you can go with smaller size and maybe loosen up on your stops a little bit and give them more time to work. But I'm getting a little bit more focused on my entries and a little bit more selective in what I'm entering. Like you said, a lot of these, growth kind of more exciting tech names, they just haven't been, as a whole, there's obviously ones that are bucking the trend, but it's more of the bank stocks. And I've owned quite a few housing stocks. Those have been strong. So I think being more selective, there, and for me, just making sure my entry is as spot on as possible. And I think by having a good entry criteria, like not buying, catching a falling knife. Like if I'm looking at entering a stock, I want to make sure, and I'm not one that's, diehard, like moving averages, support and resistance. I know some people use them for support and resistance, some don't, but I think for me, it's a good visual. If I just, I want to look at a chart without any indicators, first of all, just to make sure I like what I see. And then, if I'm entering it or I'm in it, maybe just check, the 50-day, 20-day. And if those are all going up and prices above them, I think that increases your odds of, having a winner. Nothing is guaranteed, obviously. I'm more keep swinging, reduce size a little bit, but I don't want to reduce size too much because I like to take a little profit early. So if you have such a small size, it's like, oh, I don't want to take a 5% profit on that position. It's like nothing. That shouldn't matter, but it does. So I think I got to find that sweet spot. It's different for everybody. So a little bit smaller size, and just make sure what you're entering, make sure you've thought it through and the chart looks good and you're trading with the trend within your time frame.
Do you think you could fully sort of systematize, automate 100% of what you do? Do you think you could completely remove Greg from the equation and just, new 20-day breakout, I'm buying 5% up, I'm selling some below the, something like that? Do you think you could do that? Or
Probably.
Or
Yeah, I think
yeah,
I think probably for the most part. And if I did that, it'd probably do a lot better than me, because it would remove that emotion. Um, but I think it's hard to, you know, it probably would be better, but I think it's hard to just say, okay, 5% up, I'm going to sell some because, wow, maybe something happened to get it up 5%. Maybe there's a huge volume update and it's just going to keep on running. Um, but that's a really interesting question. But yeah, I think probably.
my belief on this, I mean, generally speaking, is if you are a very disciplined sort of discretionary trader, I do think, like you said in that example there, real-time interpretation of sort of what's going on and being able to understand like factors that maybe a basic rules-based system like doesn't necessarily understand. COVID, for instance, I mean, that's an extreme example, but if you could have some situational awareness as a discretionary trader, I think you could definitely maximize things. It's just a matter of it's the other side. It's the emotions. It's right up here, right? It's the self sabotage. It's the chasing. It's all those things where that discretionary trader could then lose that side of things. So yeah, I think it's a hard question, and yeah, I'm always curious to just kind of hear how people think about it. And are there any new ideas or sort of research that you've incorporated into your trading over the past, I don't know, 12 to 24 months? Anything more recently that you're suddenly saying like, oh, I'm either giving more weight to this or something new, a new tool, a new indicator that I'm using, or is it kind of building on the foundation that you've had for the past decades?
Yeah, I mean, I try to look at new indicators and tools a lot, but I think it's mostly for me just kind of finding that sweet spot position sizing, and kind of right sizing that, and just being stop entering things just to enter them. Just be more selective. So that's not really any you know cool or exciting indicators, but I think this is just such a mental game, and you don't need to be in every trade. You don't need to watch thousands of stocks. If you do and you find the right ones, that's great. But for me, I'm not going to do that. Um, so I think I have looked at more of. So I like to look at weekly charts for ideas. I like to start there and then kind of zoom
Hmm.
in. But I have kind of, like I mentioned before, try to look at like intraday charts even to find the ideal entry area. That's something I didn't used to do. So a little bit tighter stops and a little bit larger position size for me over the last couple of years. I've been working that way because I think for me the larger position size, it kind of makes you focus on the trade a little bit more and just evaluate if this is a trade you want to take versus if you're just buying a small position and like, oh, who cares if the risk reward ratio is way off? It's just a tiny position. We'll see if it works. Like, it's not gambling.
Sure.
Like, I think the larger size kind of makes me focus a little bit more, and then I have less things to focus on because I'm not going to own as many stocks.
So, do you have a sort of review process? Like, what leads you to those conclusions? Are you journaling? Are you tracking your trades often and sort of thinking about, oh, I left money on the table, or oh, this position size should have been bigger? Or are you kind of just intuition as you've been moving along, thinking of?
I think journaling is really helpful, but I can't say that I'm a disciplined journaler. I kind of start it and then I'll skip a few days or weeks. I'll kind of go back to it. So I think I could probably I probably could have sped up my learning process and coming to these conclusions a lot more by being more disciplined with that. So um, something to continue to work on. But then just going into the trading account, looking at running all your realized gains and losses, and kind of looking at those trades, and that's how I came to the conclusion that my size was too small because I'm taking half off the table for I was leaving too much on the table, and my gains to start with were too small because my position size was too small. So I think there's just that's going to be probably a little bit different for everybody, but for me, I think you need some kind of trade review process. Like I said, I'm not the most disciplined journaler, but I think you need something in that respect. Or another thing, if you trade off the charts too, is that, if you sell something or buy something, just save that in a separate watch list, that chart. What did you look for? Why'd you sell it? Why'd you buy it? And then if you have some free time, you don't have to do it every day. Maybe, once a month, just kind of click through those and kind of, maybe write down some of your thoughts that you had. It doesn't have to be a book, but, just some general thoughts, and you can kind of learn a lot about yourself that way.
Yeah, I totally agree. Journaling is hard, and to journal correctly is hard because it takes work and it takes discipline and it takes a lot of extra time. Shout out to Edgewonk, EDGEWONK. I'll put a link in the show notes. I've got no affiliation with them, but they have a very powerful journal for traders. And to do that thing right, I mean, especially if you're an active trader, I mean, you're going to spend, an hour a day or more if you've got a lot to put in there. But it's critical. I mean, it'll show you it'll show you some of the blind spots and some of the gaps perhaps. So yeah, review process. But I'm 100% with you. I started the new month. We're journaling this month, and 2 weeks in, and then it's like kind of forgot about journaling. So
the good thing about it is it makes you really think before you. This sounds so lazy. Don't get me wrong, but like, man, if I'm gonna buy this, I'm gonna have to journal it. So I really better want it.
That's a good
terrible,
hack I've never heard before. Yeah, exactly. That's so funny. So what does successful trading look like to you now? And it's a big question, but you're sort of working that full-time job, you are trading on the side, and you're almost working 2 full-time jobs as far as I'm concerned. It's not just trading on the side, you're full in this. So what does successful trading look like for you?
For me, it looks like more consistency, a smooth equity curve. I don't want to have, a big ups. Well, I do want to have big ups, but I don't want to have big ups followed by big downs. I want to have a nice, smooth equity curve, and I want to continue to find ways to get there. I always think trading. I still play a little bit of golf, but I used to play a lot of golf. And I think I like it because it's a lot like golf. It's you, it's just you versus you. You're playing on the course. That's the market. And, if you hit a bad shot in the woods, you can either, try to be a hero and end up getting a 10 on the hole, or just chip it out, get your bogey, and then move on, and you still have a chance to put in a good score. So trading is a lot like that. And then you have to deal with, if you play golf, if you hit a drive right down the middle, it could end up in a divot, and it's like you did everything right and you still kind of got screwed here. But that happens in trading too. So it's like you just have to minimize the mistakes that you can, and then get over, if you have losses or something turns against you, you can buy a stock and there's some surprise announcement that comes out and you all of a sudden have a 10 or 15% loss or worse. So, it's going to happen. So you just need to deal with it and get over with. But yes, my ideal trading is not to make any of those 10s on a hole for golf. Don't do anything stupid. Think about it, just worry less about the returns. And I said I wanted the smooth equity curve, but that comes after the process. So focus more on the process first. I know what works for me, and it's nothing complicated. Just, buy what's working at spots where I know if it's not working, I'm going to get out. And position size correct, and take gains when they're available off their position. So I know what I need to do. It's just focus on the process and just do that, and don't do those impulse trades. Don't do those stupid, hey, I'm going to take my stop off, this one's coming back. Just be disciplined, and then the results will follow. So I'm kind of just worried about following my process, and then I know the results will follow it.
Yeah, well said. Yeah, that's a great North Star for sure. So anything else we didn't get to talk about today? Anything else on your mind? We're going to look at some charts in just a moment, but anything that we may have missed from your process, or anything you think that is important?
Yeah, I don't think so. I think, a lot of people that trade full time that work full time, that are into the markets, I feel like they think, hey, if I could just look at the markets all day, I could do this for a living and trade for a living. And, which may be true, but I feel like with the technology we have now, like we talked about alerts and, I feel like you can stay pretty active in the markets and have success without being glued to the screen all the time and still have time for a full-time job or other responsibilities that life brings.
Yeah, well said. I mean, I am a firm believer that we ought to automate more, just get away from the screens a little bit more to, in fact, improve our process. And yeah, I just seen it time and time again. I mean, unless, if your jam is day trading and you got to be at the screens, like I get it. But for 90% of us traders that aren't attacking that type of speed, I'm not convinced that more screen time is more helpful. Maybe in the beginning to get your knowledge up and get your experience, understand how markets flow and work and structure. But after a certain point, I think it's almost like let's get to that bare minimum. So I'm full on board with you there. So yeah, thanks for taking the time today, Greg. This was great. Where can people find you if they want to learn more about your work, stay on top of what you're up to?
Sure. I'm on Twitter and StockTwits. It's G_Krupins, Krupins. And I have a website as well as gktrading.net. I will say I don't update my website that frequently, but sometimes I'll post some videos. And if I want to, talk about something that's a little bit more than a tweetable, I'll post it out there. I'll try to be better with updating it. I used to be better than I have been lately, but it's out there.
I hear you. That's it, folks. Thanks, Greg, for taking the time. This was great.
Thanks for having me. Appreciate it.
All right, folks, we are back. Greg and I are about to look at a few charts. We've got a silver chart, a monthly time frame on our screen right now. So, Greg, take it away on what you're looking at here.
Sure. This was a good example to go over, Evan, because this is like everything that I look for in a chart on different time frames. So looking back at this monthly, I have the volume by price. It's anchored to that high from back in 2011, and that just shows the number of shares traded at the different price levels. So I kind of use that. I like to look for consolidation areas in price before entering, and that's just kind of another visual to say, hey, not only did price consolidate at this level, there's been a ton of shares traded here. So you can kind of see that on the right side of the chart. And silver had that huge up move from late 2010 to 2011. Then it just went down, and then it didn't do anything into 2016, 2017, 2008. So not something that you'd want to own. Mm-hmm. But you can see that trend line there on the monthly chart and all that volume by price. It started to break out. So something about it started to change character. So that looking at this longer monthly time frame, that's enough to get my interest going. But I wanted to kind of zoom in and go through my process on what I'm looking for in the trade. So if you want to switch to the weekly, we can start kind of getting in. So the weekly, you can see that same level here. This is in the summer of 2019. It makes that high. Now, I did want to point out that, the first time it kind of hit that resistance spot, that spot that acted as resistance, if it would have broken out there, that would have been a lot harder to trade because, like I said, I like to see a little, tightness. It's kind of like if you think of, the handle and a couple of handle pattern, or the right shoulder and a head and shoulders. You kind of want to see it, stop at that important point, and then hesitate a little bit, not go all the way back down to the other side of the range, but that little hesitation and the buyers step in a little earlier. That's what I look for on any kind of time frame. So you see that here with silver. It hits this $17, $18 area, kind of stops, and then it chops around for a good 5 or 6 months, and then it just COVID, all that, it just goes right back down. And then if we go into the daily, we're looking at this like 1750 area, kind of hesitating around that same area there. We'll call it 1725. Mm-hmm. You can see it comes back up. It just hesitates. It's not quite ready to break out, but it's not going down much either. And it's just kind of getting really tight in there. So given that what we saw on the monthly chart, all that volume coming in there, breaking out of that kind of that downtrend there, and then we have this horizontal level 1725 or so. This is like a picture perfect setup for me. So this is one that I bought, and then we had a nice move in that July after it broke out. I mean, you never could predict what the move is going to be this strong, but it ran up 50 plus percent within a month and a half. So just a really beautiful move in silver, and it just came together on all the time frames really nicely for me. Just a nice, clean, easy trade. So I kind of wanted to go through that example there, because that's exactly what I look for in a setup.
Yeah, I love it. It makes total sense to me. And you're using kind of like a market profile volume on a horizontal scale. Are you looking at volume on a breakout? Does that matter to you, volume on a breakout?
Short answer is no.
Mhm.
I like to see it. Don't get me wrong, but I'll still buy a breakout, because a lot of times what you'll see is price will start breaking out and the volume comes later. So you can wait till that volume comes in. Maybe you have to pay a higher price, but it's not. I don't need that. I like it if it's volumes in the breakout and I'm in it right at the right time. Maybe I'll have a little bit more confidence. Maybe start off with a little bit more size, but it's not. I don't need to see that, because I've seen so many breakouts kind of start creeping up, and then the volume starts coming in, and that's when the big move starts.
Yep. Yeah, it's so interesting to hear the feedback on volume, because I feel like it's one of those, you're on one side of the fence. Traders usually have opinions on both sides, and I agree with you. From the tests that I've seen, I love to see it, but I actually am not convinced that you need to have it to have a successful breakout. It doesn't seem like it correlates enough that it's required. Like you say, the volume could come in later, and so on and so forth. So cool. That sounds great. Let's pull up our next example. Are we looking at the FTNT weekly?
It is, yes. So along the same lines, I just try to keep things as simple as possible, and you can see this one is in a nice, strong uptrend there for quite a bit of time. There's a lot of really good entries going back there in time, but wasn't on my radar then. So I was looking at it here. This was in early 2021, early this year.
Mm-hmm.
You can see it just hesitated. Nothing complicated. It has this $150 area it can't get through. And then when it goes to break out there, it gets tight in that area. If it just flew right past that area, I probably would not enter the trade. I maybe would wait for pull back into that area. But I really like when it gets the tight price action. A little compression is usually means that when it breaks, it's gonna move a little bit more aggressively. Nothing's guaranteed, but you want things to either, at least me, I either want to get stopped out quick or have a nice quick move, because what you don't want is, I think time is important too. It's an important factor to consider, because you can put your money to other things that are working. So you don't want to you don't want dead money to sit in a trade and you get stopped out 6 months later, and there's plenty of other things that were moving in that time that you could have made money on. So that's why I like to see a break from compression. So you can see it right here, 150 on the weekly chart. If you go to the daily chart, you can see that compression really coming through, and it's just a nice clean breakout. It hits that level, it bumps up against there 3 times, makes kind of a ascending triangle type look, some higher lows, and then it decides to go. And then the earnings got out of the way there in early February, and then after that, it really took off. So I mean, that's what I look for in a trade. It's nothing complicated. But if you go back and look at stocks that have done well, oftentimes, not every time, they usually just come from a simple breakout like this. A little bit of tightness and compression, and then it just goes. But another reason I wanted to mention this chart, Evan, you can see it. It still looks good,
Mm-hmm.
and I can't remember the exact reason, but I don't own this anymore.
Mm-hmm.
And I was looking at it, and I really had no good reason to sell, at least not sell the whole position, because I entered this as a full position. I took some profits along the way, but then in the meantime, I have to pull up my records to find out. But I'm thinking if I remember right, I got stopped out there at the end of March.
Mm-hmm. Mm-hmm.
But with my time frame that I trade on, it really didn't it didn't make a lower low or anything. It's still trending nicely. So I was looking at this. I'm like, why did I sell the rest of my position? Because it's continued to move fine. Well, a lot of the other things haven't. So that's just something I wanted to bring up. We talked about selling. Selling's a really hard thing. This was a good trade, made money on it, but did I really follow? Do I need to look at my sell rules and maybe reevaluate? I'm not. My time frame's a little bit longer, so I really had no good reason to sell this one while it was still trending nicely.
Yeah. Yeah. Selling is, I mean, I surely know why I would have sold because it was up and it was running, and I'd probably be like, yes, lock it in. I don't want this thing. I'm too scarred when things reverse. So I just, I'm always way too quick to lock in profits. And, I think that's almost most of us traders that have been around for a long time. We have all the scars of when things just totally reverse. And so our brain is just like, let's protect. But yeah, I know exactly what you mean in terms of structure. Not a whole lot changed in March. So, arguably you could have still held a position. But yeah, I mean, I love the setups. I mean, you've said that they're very simple. They are simple, but it's all the other stuff that makes it hard. It's the discipline of taking the trades. It's the patience. It's the sitting in the trades. It's the risk management. That's the real difficult part about trading. It's like you said, and we've said it multiple times. It's everything in our head that is the tough part.
Yep. You look at charts of things that do well, and it's like they usually present a very clear. Obviously, you have the benefit of hindsight. That it ended up doing well, but they're really simple setups. A lot that work here. You just need to take them and get all that other mental stuff right.
Yeah, 100%. Yeah, totally agree. And last thing that comes to mind on these charts, so both of these have been sort of breakouts from like horizontal levels. Are you a fan of trend lines at all? Are you entering on like trend line breaks, or is it almost always flat tops?
Almost always flat tops. Now, if it's a trend line break, say it's like a break up out of like a descending triangle type pattern, and it breaks that downsloping trend line, that'll get my attention. But I'm still looking for a horizontal level to trade off of, just because I know where my stop's going to be. If that trend line is sloping down, you don't want that to be your stop because it's going to keep getting lower. So just
true.
But that's a very I will look at those, but I really like that kind of flat top break. It's not an exclusive. I don't do that exclusively, but I will look for some kind of horizontal level that has acted. Even if I have to go down to a 30-minute chart or something, I want to find something that looked to be resistance or support in the past that I probably wouldn't want to hold on to trade if it was below that. But like we talked about earlier, if it gets back above that, you got to think about re-entering if it meets your other criteria.
Yeah, that makes sense. Back to where the stop's going to be, right? And just kind of what makes the most sense there. So awesome. This was great. Thanks again, Greg, for taking the time today.
Thank you, Evan.
Thank you for listening to Smarter Trading. I hope you enjoyed this week's episode. For all of the show notes, links, and callouts, head on over to thetraderisk.com/podcast. If you enjoyed this episode, please leave us a rating and review on iTunes. Smarter Trading is hosted by me, Evan Medeiros, and produced by Ashton Alexander. Thanks for tuning in, and we hope to see you in the next episode.